Good afternoon, everyone, and thank you for joining us for our webinar today, where we're going to be talking about the latest update with the Paycheck Protection Program. My name is Mark Heath. I'm a partner here at McKonly Asbury, and I'm Director of Tax Services. With me is David Blain, Partner and Director of Entrepreneurial Services. Before we get started, as usual, if you have any questions for us, please submit them through the built-in questions function in the webinar control panel, and we'll do our best to answer them during or after the webinar. And if any of you are in the market for CPE credit, there will be 3 polling questions. We'll try to bring those up and do everything we can to get your attention on those. So be sure to answer those if you're looking for CPE credit.
Exactly, Mark. Exactly. Make sure that you're paying attention to the CPE questions. That's probably the best part of the whole program.
We were just talking about how Dave can't deal with silence. And like I paused to take a breath, and Dave just had to start talking.
That's right. That's right. There we go.
So why don't you give our quick firm overview, Dave?
Yeah, sure. So for those in webinar world, if you're not familiar with McKonly Asbury, we're a CPA firm with 3 offices in Camp Hill, Pennsylvania, Lancaster, Pennsylvania, and Bloomsburg, Pennsylvania. We have about 100 employees. We serve a number of different areas, from business and advisory consulting, audit and assurance, entrepreneurial support, accounting, internal audit, professional placement, and tax services. Obviously, Mark being the head of our tax department, I'm the head of our entrepreneurial support and client accounting services department. But industries that we serve, a vast area of industries. Affordable housing is a big industry of ours. Construction and manufacturing, healthcare, benefit plan audits. We do a lot of work with family-owned businesses, first, second, third generation families. Nonprofits is a big area for us. Technology is a new growing area that we spend a lot of time in regards to SOC audits and technology security. All right, so moving on. So today's outline, we got some new updates, right, Mark? Some new updates, some hot stuff off the presses here.
It is.
We have
very exciting.
Yeah, pretty exciting stuff. The first thing we're going to talk about is this new application that came out in the month of October for forgiveness, Form 3508S. We'll get into the details of that, but for a number of people, this might actually be pretty good news. The other thing, too, is that might not be as good a news.
Going the complete opposite direction.
Going in the complete opposite direction is this new borrower questionnaire that literally just got released no more than a couple weeks ago at the most, but it's now just starting to show up with banks and starting to show up in the marketplace right now. So we're going to go through what that questionnaire is. Then what Mark and I are going to spend a little bit of time on is, since we've been spending a lot of time helping individuals and organizations with their forgiveness applications, and going through some of the more common questions that we're getting with the forgiveness applications, just to kind of make sure that we're clarifying points that seem to be out there that seem to be a recurring thing. And then last and final thing is some final thoughts on where things might go from here with the SBA Treasury, new administration coming in, just how that might work out, pan out. So, Mark, I had to resurrect this slide.
You love this slide.
I do love the slide, but I can't help it. But knowing what we just saw with this 3508S form, and then this questionnaire that went, as you said, in the complete opposite direction, this what Roddy Piper said when he said, "Just when you think you have all the answers, I change the questions." I mean, it couldn't be more true than when you're dealing with the government right now in the SBA. I mean, what do you say?
It fits. It absolutely fits, particularly with the 3508S, where they just basically said, all you just report back to us that you used all the money, and we're just gonna all go along our merry way and forget anything ever happened. And then, like you said, and go in the other direction.
That's right.
They already said they were going to review all loans over $2 million, but now they kind of in the dark of night just slipped these questionnaires out there, and the SBA is not even doing it themselves. They're giving them to the bank and making the bank be the bad guy.
Yeah,
and
exactly.
To give these questionnaires out. And now I'm sure I think people were sleeping pretty well at night, assuming as long as they use the funds for what they were supposed to be used for. We're start of a pandemic. No one knew what was going to happen. So, all's well. Well, now everybody's just getting nervous again.
Exactly right.
If people weren't nervous enough already with everything going on in the world.
Yeah, 100%. So let's talk a little bit about what we know. So the first thing we're going to talk about is this form 3508S form. This is good news for anybody that had a loan that was $50,000 or less. This just came out in October, and we put the link there to be able to get to see what the form is. But this form is very simple, Mark. Basically, what it says is that if you, let's just go to the next slide. Basically, if you have a loan that is $50,000 or less, you're exempt from the hourly wage calculations or any reductions thereof that you would have had to take some reduction to your loan forgiveness or FTE calculations. And it basically just says that if you have this loan that's $50,000 or less, just fill this form out, which is really one page, and it's just a one-page certification. You don't put any numbers on it. You just certify that you use the loan for the purposes that it was intended for, and that's that. Can't get any easier than that, can it?
No, and it's interesting. I thought they might go a little higher than $50,000. $50,000 is pretty low. When you back into that number for your loan, that means your payroll costs in all of 2019 were $240,000. So this is going to be a lot of smaller companies. Obviously, I thought they would have gone a little bit higher because, like we talked about before, like 85% of the loans handed out were less than $150,000. So
Yep.
I thought they might do a little more catch-all in there, but it's better than nothing.
Yeah, exactly right. And so I think from the, and if you're a bank too, you just think about how, all these smaller loans that subcontractors or contractors came there, subcontractors where they were just taking the loan out for, their salary or income replacement. This makes it easier on the bank to just check the box on that and move on. So, all right, paging down. While there's no required, now the one thing though, I think that we do need to make sure that everybody's aware of that. Wow, it's great that this is a 2-page form and it's all just certifications that you got, and you can just check the box and move on. You probably should still keep the documentation, and you probably still should do the calculations if it's payroll related and you did have it associated with payroll with your organization. Because of what we're seeing right now, that the rules with the SBA continue to change. So you might want to still keep that documentation. And in fact, I was on an SBA webinar yesterday, Mark, and they were saying that any documentation related to any of your loans, you're supposed to keep for 6 years. So,
yeah, and that's an important point. While we have no indication that the calculations for FTE reduction and salary and hourly wage reduction is going to be required if your loan's less than $50,000, it's just a bad idea to assume that no one's ever going to ask that question. So do the calculations, keep them at the very least. Keep all of the detail so that if you didn't do the calculations yet, you could do the calculations if you needed to at some point in time.
Exactly. It should, and again, just like we were saying, Mark, with the way things have continually changed, flipping from one pendulum to the other, you just never know what they might come back with. Now, I'm pretty sure that they're probably, with these 3508S applications, they're probably just going to check the box and move on, but you just never know. So make sure you're keeping those documentation. Make sure you're keeping the bank statements, the payroll reports, utility, rent, mortgage interest payments, anything of that is related to loan forgiveness. You're keeping that documentation for any types of further analysis that might be out there. Because keep in mind, the SBA does reserve the right to look at any loan still. All right. So already 10 minutes into this thing, and we're into the first polling question. And this is one of my favorite polling questions. Messiah University, formerly college. How about that, Mark? I picked up on that.
I was impressed that you caught that. I'm not even sure I would have caught that.
Had this great player graduate from his program. So your choices are Christian Pulisic, David Beckham, Mark Heath, or A and C. So we'll give everybody about 30 seconds or so to complete this first polling question, and then we'll see what the answers look like, Mark. I don't know, Mark.
Well, the U.S. men's national team plays today at 2:45, so I might bang out early here from the webinar. So you might have to carry the last 15 minutes on your own. But Pulisic is still hurt. He's had a little hamstring problem there that's been lingering since the spring, so he's not playing today. But yeah, so anybody who's interested in soccer, the U.S. national team's playing today at 2:45, playing Wales.
Yeah, in those hamstring injuries, they're the only way you get better with those is just let them rest. So
yep.
All right, we're 3 seconds, 2 seconds, 1. So let's look at the answer here. So we got Christian Pulisic was 12, Beckham 11, Mark Heath 44%, and then A and C 34. So those that said C, Mark Heath, were correct. Well done. Yes, Mark is a famous player from Messiah University. Funny story, Mark, and I got to throw this out there. It's only going to take 30 seconds. But when my son played soccer at Central Dauphin High School, the coach at Central Dauphin High School actually was Mark's coach when he coached at Hershey High School. And he said to me that Mark was one of the most lethal, deadliest strikers that he ever coached. How about that, Mark?
Yeah. Greg Davis, when I was when in high school, was didn't exactly hand out compliments. So clearly, he's trying to make up for that by just
there we go.
So moving
on. Okay, so flipping the pendulum from 3508 S, where you could just basically get loan forgiveness if you just fill the form out. Now we go to the other side of the table. We go to forms 3509 and 3510. These are new forms that just came out, as Mark said, in the dark of night, late in the months of October, and now are really surfacing with the banks. And basically what this is this really more focused on those with loans of $2 million or more. So while probably the majority of those on this webinar probably don't have loans of greater than $2 million, it's still probably important that you pay attention here, because knowing what we know, they might just put this questionnaire in place for loans less than $2 million to a certain dollar limit. So you might want to just pay attention. But basically these two questionnaires, 3509, which is for profits, 3510, which is for nonprofits, and basically they're exactly the same forms. They work on they want to know basically when you sign the certification that says that you needed the SBA loan, the SBA lending through the Paycheck Protection loan. They want to verify the certification that you made, basically, is what it comes down to. So again, it's for loans greater than $2 million. There's two separate forms for for-profits and nonprofits. One thing that's important to note here, Mark, is that these forms will not be made available through the SBA's website. So it's not like you're going to be able to go onto SBA.gov and go in there and find, as you can find the forgiveness forms, you're going to be able to find these questionnaires. From our understanding, these questionnaires are going directly to the banks, to the bar, and the banks and the lenders are then providing them to the borrowers to fill out as part of the SBA's review of your loan. If you get this questionnaire, you have 10 days to complete the questionnaire after receipt from the lender. Failure to provide the information within that 10 days could deem your loan to be ineligible by the SBA. Now, again, this is all information that we're gathering on the way this questionnaire and this form is supposed to work. But from what we're seeing from organizations like the AICPA and from talking with others within the SBA, this tends to be the case with what we're seeing with this form.
So these last 2 points just kind of boggle the mind. I've been trying to think of why they're doing it this way, by giving it to the bank and then having the bank distribute them instead of just making it a part of the application. And I mean, I guess there's probably some borrowers who got a loan of more than $2 million and have already submitted their forgiveness application, in which case obviously there'd be no way to get it to them through the application. It's just so odd that they're doing it this way, going through the bank, and not just doing it the way they've done literally everything else from day one. And then this thing where you have 10 days to complete the questionnaire. I mean, everything with the SBA, with the whole program, with forgiveness, with application availability, everything, they've just been dragging their feet with everything. And now all of a sudden they have 10 days. You have 10 days from the day you receive this questionnaire to fill it out. I don't get it. And two, I wonder who's on the hook if the bank doesn't get it to you. Are you on the hook, or is the bank on the hook? I mean, I guess you have 10 days to complete it after you receive it. So if you never receive it, you never have to complete it, I guess.
Right.
It's just the whole process. I'd love to get, kind of an inside look as to what they're doing here and why they're doing it.
Yeah, one of the questions just came in too, Mark, is it 10 business days or 10 calendar days? That would be something that we would have to verify, because I'm not sure. I would assume it's business days, but every time we assume, well, we know what happens when you assume.
Right.
So it could be calendar days, but I would probably think it's business days.
One would think, yeah.
Yeah. So, and the whole thing that it's not available on the website, like you said, it's just it's par for the course in regards to where this whole program is going and how it's been administered. All right. So, anyways, so why the questionnaire? Well, the first thing is to facilitate the collection of supplemental information to evaluate A, the good faith certification, and B, the economic uncertainty made by the loan request necessary. Provide taxpayers a demonstration of maximum program integrity. I mean, this is all actually laid out in the form itself. It tells you why the form's there. And then to ensure requirements of SBA FAQ 31 and 46 have been substantially met, being that we gave organizations the ability to fill out these certifications that are greater than $2 million, and that if they're going to fill these out, they're making the good faith certifications that they had economic need and they needed the funds. The one thing about the program, Mark, real quick, is I've kind of gone back and forth too about the whole questionnaire. And while one part of me says that the questionnaire is kind of contradictory to what the PPP program is about, the other one, and maybe I'm just being too optimistic, the other one, it makes me feel like, well, maybe this questionnaire is just the way the SBA is going to expedite review and closing out those $2 million loans. I don't know. Who knows?
Yeah, I mean, honestly, it all makes sense. Like, it makes sense that they would ask these questions, that they would gather the information just to make sure that, everything's on the up and up, and that's fine. But where was this 6 months ago? I mean, that's what we're looking for. Where was this? Because all they said was to get the loan, you had to have a good faith, good faith application, whatever. And that with the economic uncertainty of the worst economic and health crisis in 100 years. I mean, who doesn't that apply to? And then, they kind of came out and said, well, if you're a public company, you probably shouldn't get this. So a couple companies gave it back through some other parameters around it. But like, where was this then? And, there were still people getting paycheck protection loans 3 months ago. And and trying to do this, and where they actually had the benefit of hindsight. So obviously, there's lots of companies out there who back in March, everybody was freaking out, and rightfully so, as to because of what was going on. And so of course they're going to apply for it. And there are lots of businesses that did really, really well through all of this. So, what are they just going to make them pay it back? I don't know.
What about, here's the one too. What about those that, let's say you got your loan on April 10th. So your 24-week covered period ran out, in September, October, sometime around there? Or now with this form just coming out, and those organizations may have already applied for forgiveness, sent their forgiveness stuff in. It might have already been approved by the bank. Are we now going back to them and saying, oh yeah, by the way, you got to fill out this questionnaire?
Right.
You know what I mean? So.
Probably.
It's just, yeah, probably. Exactly right. It's just interesting. So this questionnaire is broken out into two areas. There's a business activity assessment area, and then there's a liquidity area. And what we're going to do is quickly go through some of the questions that you might encounter when you go through the business activity assessment area. The first item is, and this is kind of interesting, Mark, they asked for borrower's gross revenue for the second quarter of 2020 and the same quarter in 2019. So they're looking at Q2 versus Q2, 2020 versus 2019. What they're using that information for, I have no idea, but that's what they're looking for. They're also looking for, was the business ordered to shut down at the same time after a declaration of a national emergency after March 13th? And did the business have to do anything significantly to alter its organization or to alter or modify how it operates? So the revenue thing is kind of interesting to me, though. It's just, to ask, like, hey, let's compare your 2020 revenues versus your 2019. That's just, I can't get my hands around that one.
Well, it's in this kind of half of it strikes me as not well thought out, but then the other half of me says that no, this is very specific. The reason I say that is they use the words business activity, and the business activity is specifically in one of the exceptions for the FTE reduction, saying that you couldn't maintain the same level of business activity. Well, I mean, how many companies are out there who grew 30% from Q2 of 2019 to the end of Q1 in 2020? And so their Q2 in 2020, the top line could look dramatically better than Q2 of 2019, but the bottom line is just terrible because they probably ramped up. They had excess capacity, excess demand, and so they just ramped up all their costs, and then but the top line looks a lot better. So it just strikes me as not being terribly well thought out. But I mean, I guess you got to pick one, and you say, well, we're just going to ask about gross revenue. And again, we don't know. We obviously don't know what the mindset is of the SBA, and are they really going to go after people, or are they just gathering information? That's what we don't know. And again, would love to have some insight on that.
Exactly. The other thing you're going to see in there is any voluntary modifications or changes in business operations without a government order. So before we saw the question of, did you have to modify because of the government order to shut down? They're also looking for information on, did you make modifications even though you may not have had a government order to do so? And were any capital improvement projects not related to COVID-19 undertaken during the time period to the end of the forgiveness period?
Dave, what's a capital improvement project? Is that defined in the SBA somewhere?
I did not see any definition of that at all. I mean, one would think that a capital improvement project would be where, you're putting capital equipment in place, building a building in place, putting, something of that nature in place. But yeah, it's not defined anywhere actually in the form or anywhere in the SBA in regards to what a capital improvement is. Leasehold improvements could be, right?
Yeah, I mean, what if you're renovating a bathroom? Is that a capital in your office? Is that a capital improvement? Yeah. And it's already scheduled, it's already slated to be done, and now all of a sudden, I guess maybe you could say, well, that was undertaken before it started. It just happened during the period. I don't know.
Yeah, again, a lot of questions that it's just sort of odd, but we'll see. What even gets more interesting, though, Mark, as we go into this liquidity assessment, and the first thing they ask now, so they ask about that business activity, which was gross revenue, but it was a bunch of questions and about modifications you have to make to your business. You go to this liquidity assessment, the first question they ask is how much cash and cash equivalents and investments did you actually have on hand on the last day of the calendar quarter immediately before the date the borrower's PPP loan application. Like,
well, what happened to the stock market in March? Anybody remember? So are they going to start saying you were supposed to liquidate your investments, your holdings, when the market is down 50%? it just, yeah, these are all tough ones, and I can complain and whine all I want, but we're better served focusing on what information they're looking for and why they're looking for.
Yeah, and exactly right. And the other thing too is when it came to cash, we have clients that from the perspective of a balance sheet, they had strong cash positions at the time the pandemic started, without a doubt. But the industries that they were in were going to see significant impacts. So so a lot of our clients use cash that they had to operate and took PPP loans to continue to keep people employed. Because remember, Mark, the whole intent of the PPP loan was to fund payroll and to keep people employed, right? Mm-hmm. So, the PPP loan is going to help you fund to keep people employed, but you're still going to need other cash to operate.
Right.
So why we're asking about cash equivalents is interesting, but that's the question that they're asking. The other thing too is they're asking is any dividends or other capital distributions, like tax payments to its owners during the period from March 13th to the end of the PPP forgiveness period. I mean, I guess I can kind of understand that. I mean, we don't want, the whole intent of the loan was for payroll protection, not owner tax preparation protection or owner tax estimate protection, you know what I mean? So I can kind of understand that question being asked. And then any prepayment of any outstanding debts during the period from March 13th to the end of the forgiveness period. Again, these are the questions that are asked on the form. These are the things that if you have a loan greater than $2 million, you should just be prepared that you're going to have to answer these questions and have the data to back them up.
Yeah, these last two, I feel like those make for some bad optics. If you're making distributions that are not meant to cover taxes, in prepaying any debt during that period, that makes for some bad optics that the SBA may not look kindly on. But again, we just go back to the question of you had to make a split-second decision almost in the beginning of March, middle of March, to figure out whether or not to apply for this loan. Yeah, exactly. All right. Some other questions they're going to ask is any employees or owners who were compensated in excess of $250,000 on an annualized basis during the forgiveness period. Any equity securities listed on National Security Exchange, and if so, borrower's market capitalization at the date of the borrower's loan application. If it was a public company, owned more than 20% of the borrower's outstanding equity securities, and was the borrower a subsidiary of another company. So, some of these questions are, I would think, from a questionnaire standpoint, rather standard. The first one, though, are about the owners and employees who are compensated in excess of $250,000 annualized. I think that goes back to your point that you made a little earlier, Mark. That could be an optics issue. Just from an optics perspective, if compensation during the period paid was greater than $250,000 on an annualized basis, that does make it look a little odd. So again, it's just one of those things you should be aware of in regards to the information that's provided to the SBA. All right. Finally, the last couple questions on the liquidity side are going to be, was 20% or more of any class of the borrower's outstanding equity securities held by a private equity firm on the date of the loan application? Was the borrower an affiliate or a subsidiary of a foreign or state-owned enterprise? And did borrower receive any funds from another CARES Act program, like an EIDL program? Mark, the EIDL program is an interesting one because as I was on the SBA call yesterday, one of the things that they brought up, and this is probably something that we should address while we're talking about EIDL loans here, is that one of the issues that the SBA is seeing is that those that are completing these forgiveness applications are putting on the forgiveness application the EIDL grant that it might have been 10,000, it could have been 9 or 8 or whatever it is. They're putting the EIDL grant on there, and they're calculating that in as part of their forgiveness. And the SBA is adamantly saying, do not put any of the EIDL advance on your application. The only where in the application it belongs is in the very front of the application where it asks, did you get an EIDL advance? And you put the number there. Do not run it through your calculations for forgiveness.
where you run down all the numbers on forgiveness. You're not to put it in anywhere in there. The SBA will tell the bank what that idle loan is, and the bank will factor that in at the end of the day when they come back to you with what you may owe back as a loan or the advance as a loan. So they did bring that up yesterday a couple times on their call.
Yeah, I haven't looked at the application in a few days, but isn't there a spot on there where it specifically backs out the EIDL grant?
You know, I don't think I went and looked at that the other day. I did not see that. I saw where it belonged.
That up then.
Yeah, I saw where you put it on the front page where it asked.
Okay, that's what I'm picturing. Okay.
But it wasn't in the
yeah,
actual
right.
roll down of the calculations of the pluses and the minuses.
Okay.
But I thought that was important, a subject that everybody should be aware of, and to make sure you take that into account. So that's kind of the laundry list of questions that you were to get on business activity and the liquidity assessment, Mark.
Yeah, one interesting thing I thought was interesting was that that there were very few questions on the owners, and the questions that they did ask about ownership of the company was PE and public company. I mean, if you still have a loan and you're owned by private equity or you're owned by another public company, like, I feel like maybe you weren't paying attention, because that's one thing they harped on from the beginning, which caused a bunch of borrowers to pay back the loans immediately.
Right.
Kind of that point of, if you're owned by private equity or you're owned by a public company, there's a really good chance you have access to capital, so you should not be getting this loan. But what they did not go after or ask about was just individual owners. I mean, there are lots of companies out there owned by individuals who are, multimillionaires, who, if you dig deep enough, you could make an argument that they didn't need the loan. Don't get me wrong, I'm glad they didn't ask those questions, because that starts getting pretty. I mean, that's a pretty big intrusion. But I was surprised by these questionnaires. So nothing surprises me anymore. I am a little bit surprised they didn't go there at all. But good they didn't.
Well, Mark, we got a wide audience of individuals on this. Maybe the SBA is on here, and the next thing you know, they're going to revise this form. Courtesy of Mark Heath.
Yeah, my fault.
Thank Mark on that one.
Sorry.
So, a couple other things real quick on these two forms. Certifications and documents. Some similar. When you get to the end of it, there's similar certifications that you would see on the loan forgiveness application. That yes, I used the money in accordance with the loan. I used within 24 or 8 weeks. All these similar certifications that you see on the loan forgiveness application currently, and the documents that you are to provide with the questionnaire. The question about available cash equivalent balances, you need to provide that information to support that. You need to provide any amounts distributed to owners. In that one question that we talked about. And also payment of debts and compensation to employees and owners greater than $250,000 annualized. You have to provide the documentation that supports that information. So hence, going back again, you got to make sure you keep all these records, keep all this documentation, and as a refresher, got to keep it for 6 years. Okay, SBA reserves the right all the way to 6 years to come back and review this. So,
which means keep it for 7 years just to be safe.
Just to be safe, exactly. All right, here we are, polling question number 2. This famous American general was present at the Battle of Gettysburg, Mark. Was it George Custer, Ulysses S. Grant, John J. Pershing, or A and B? Could give everybody about a minute here to think about this one. Might be a little bit of a trick question for some, but we'll see. We'll see what people think.
I got to start doing these questions, because whenever we decide that we're doing the next webinar, like literally the next day, Dave has all the slides done already. And so I never get a chance to put these questions in there. So he keeps flipping in questions about me. And of course, he doesn't put his own name on this list for this question.
Oh, Mark. Well, Mark, you're a busy guy. I mean, you're running our tax bracket. You remember tax practice?
Our next webinar, there's gonna be a question on there about selling Christmas trees.
Oh, there we go. All right, 2, 1. Let's go to the answer here. So the answer, let's look here. We got George Custer was 20%, Ulysses S. Grant was 50, John Pershing 6, and A and B 24. So the answer to this question is A, George Custer. Quick history lesson here. Ulysses S. Grant was at Vicksburg. He was not at Gettysburg. He was at Vicksburg. And John Pershing was the head of the army in World War I when we were in Europe. George Custer was the only one that was there. And George Custer, by the way, he was key in the last day of the battle, especially on Pickett's charge, because he cut off the Confederate cavalry, which was led by Jeb Stuart at the time, from supporting Pickett's charge. So, little history lesson there for you. How about that, Mark? How you feel about that?
I love it. You are a wealth of Civil War knowledge, which is very cool.
There we go. There we go. All right, so we're going to go on to talk about some common questions that we've been getting on a regular basis, that Mark and I are getting as we are reviewing paycheck protection information from clients and even non-clients that send us information on a regular basis and ask for our thoughts. So the first item is some organizations, for whatever reason, are looking at this as being a term loan, and that's fine and all if you want to take the loan on this and not take the full forgiveness. For whatever reason that might be, I have no idea, but in some instances we are seeing that. But anyways, keep in mind that, if you got the loan before June 5th, it's a 2-year term loan with a 1% interest rate. And if you got it June 5th or after, it's a 5-year loan with a 1% interest rate. So a little bit change in the terms. And also, first, there's a deferment period of 10 months on the loan from the date of the actual loan itself. So just want to make sure everybody is fully aware of that.
Well, and this is important to note, because we talk a lot about forgiveness and not getting full forgiveness, and like not getting full forgiveness is the end of the world here. It's just not. I mean, a 2-year term loan at 1% or a 5-year loan at 1%. I mean, that's pretty good. So it's just not a terrible thing if you don't get full forgiveness.
Right.
And I could see some companies just electing to go this route by saying, hey, we thought we were going to be affected by this, and so we took the PPP loan, but here we are, 8-9 months later, and all is well, and our industry has done very well. We were not hurt by this, so I could totally see some companies just electing to say, hey, you know what, we should probably just pay this back. So at 1%, that's pretty good.
Yeah, you're not going to get 1% interest on. I mean, that's a pretty good loan.
Yeah.
All right. Another one that keeps coming up is, when should I file for forgiveness? Should I wait for further legislation? Well, here's what we're thinking. First thing is, most bank portals for submitting loan applications are now open. Although I will tell you that I've found out today that there are some local banks that do not have their portals open, while other local banks have had their portals open for quite some time and are going through the process of loan reviews and forgiveness and pushing it to the SBA. So it would depend on where your bank's actually at. If you can file the form 3508S, which is for the loan that's $50,000 or less, there's no reason to wait. You must just do it and get it filed. You don't have to worry about calculations of FTEs or any salary reduction issues. If you've used the money, file the 3508 and be done with it and move on. Keep in mind, businesses have 10 months post the cover period to file for the forgiveness. You should take into consideration end of year needs. And what we mean by that is if you have covenants with your bank, if it's some type of debt coverage ratio, fixed charge coverage ratio, something of that nature, where the debt calculation is factored in there, you might want to take that into account in regards to the how quickly you want to get your application in and how quickly you want to try to get this off the books. And we suggest be cautious as to waiting for further legislation for forgiveness. There's a lot of this talk out there, and we're getting questions about it right now about what about loans less than 150,000 being fully forgiven. That seems to be kind of one of those things that's floating around out there in the marketplace. But there's no guarantee of any legislation forgiving anything. I mean, right now they passed something that's $50,000 and less that forgives it, Mark. But what is there a likelihood of 150? No one knows for sure. I wouldn't wait for legislation. I wouldn't wait for Congress. I would take what you know right now, and for a lot of the simple applications, the 3508S, get it done.
Yeah, I kind of feel like, of course, as soon as I say this, they'll probably announce tomorrow they're forgiving all loans of 150,000 or less.
Exactly.
I kind of feel like if they were going to do that, they would have done it already. I mean, they went through the process of putting out a special application for $50,000 or less that basically just provides full forgiveness. I feel like if they were going to do this, they would have done it by now. Clearly, they're focused on the good faith certifications that you need to make with these two new forms. One thing to note on the 3508S, and somebody actually asked a question about this. Up at the top right-hand corner, it says expiration date November 30th, 2020. I don't know if the form goes bad after November 30th. You can't use it anymore. I don't even know what that means. I guess maybe it means the 35OS has to be, if you're going to use this form, you have to apply by November 30th, maybe. But I don't know.
Well, Mark, they did change the dates on the other forms too, the easy form and the regular form, because they both said 10/31 on there, and now they changed those to 11/30. Another question that just came in here too, Mark, just to clarify too, is you can actually go back to, if you got your loan before June 5th. It's a 2-year loan, but you can actually go back to your bank and have the bank convert that to a 5-year loan. So you do have that option. You can do that. Okay.
And the other thing, and this is a whole nother conversation that, interestingly enough, we're going to be covering in some webinars here in December regarding year-end planning for this. The slide we were just on before, where we mentioned taxes in there. As of right now, if they don't pass legislation to make the expenses deductible, once you get forgiveness, the expenses that you paid with the loan are now considered not deductible for tax. So it's a long way of saying that the loan forgiveness ends up being taxable. So if you get forgiveness before 12/31 and you're a calendar year company, you're picking that income up on your 2020 return. If you get forgiveness on January 1st, 2021, then that income tax liability is deferred for a whole nother year. So keep that in mind. I know everybody wants to get forgiveness, wants to get the loan off their books, et cetera, et cetera. Keep that in mind for all of this, because general rule is you want to defer income. Now, the other piece of that is, our tax rate's going to go up in 2021. I don't know. We still have 2 Senate seats that need to be filled. So we're just going to have to wait and see. I'm still a firm believer that no matter who is in control of the government next year, that taxes are going to have to go up somewhere. But I don't know if that's going to happen in 2021. I don't know if anybody has the stomach to raise taxes in 2021. So if they do go up, sure, I could see them going up a little bit. I don't see them going up dramatically, at least until 2022, 2023, if at all. But just something to keep in mind.
But Mark, going back to your comment about the income from a tax perspective is not it's not recorded as income for taxes, but you don't get the ability to expense the expenses either. That goes back to what we were talking about when we make the statement, you should take into consideration year-end needs. Just like you said, you might want to make sure from the perspective of what is this going to mean to your taxation for you as an individual, your company. You might want to take that into consideration in regards how do you do the application and when do you file for forgiveness. The other thing too, Marco, is we keep getting the question of what form should I use. So again, any loans of 50,000 or less, use the 3508S form. If you have a loan that's more than 50,000 and you meet the exemption criteria is as outlined in the instructions for the 3508EZ form. And those exemption criteria are you self-employed? You did not reduce wages greater than 25% and did not reduce FTEs versus a comparable period, or you did not reduce wages greater than 25% and operated under compliance restrictions from CDC, HHS, OSHA. If you can meet any of those, then file the 3508EZ form and get that in. Any other loan that doesn't meet those two has to go with the long form. You have to file the long form. Pretty simple there, I think. So, all right. The other question, Mark, that we get, and this is an interesting one, it's what is the definition of an FTE? So the way that it's outlined in the Act, in the CARES Act, this is an FTE is defined as 40 hours a week. You work 40 hours a week, you're considered one FTE. What's interesting that we're running into, though, is we have clients coming back to us and saying, my standard week for my employees is 37 and a half hours because we give them a half an hour for lunch 5 days a week. So it's we pay them for 37 and a half hours. How does that get handled? Mark, it's an interesting question because the way it is defined is as 40 hours. But I think what we would suggest you do is you go back to your bank and talk it over with your bank in regards to how your bank's going to look at this, because ultimately they're going to have to be the ones that look at it from the forgiveness application perspective and how this will be reviewed.
Yeah, I'd encourage you to actually do the calculation, because I honestly don't think it's, as long as you're comparing apples to apples, I don't think it's going to make a difference, because if you say 40 hours is full time, but your employees only work 37 and a half regularly, so that one employee is going to be 99.9 whatever percent FTE, and I don't think it's gonna make a difference as long as you compare apples to apples. We ran into this when we were asking, because under the Affordable Care Act, a full-time employee is 30 hours. So we were running the numbers using 30 hours. And if you just extrapolate it out to 40 hours a week, as long as you're comparing apples to apples using 40 consistently in the denominator, your number ends up almost exactly the same. I can't imagine something like this would make a dramatic difference.
Right. The other thing that we're running into, Mark, too, is the question of when reviewing the FTEs, does it have to be the same person? So I've had a number of people, and I think you have as well, where they've come back and said, well, Sally Sue worked for me last year, but Sally Sue doesn't work for me this year during the covered period. How do I take that into account? And the answer is this. They really don't care what the names of the individuals are. They just want to know what the FTE count is. If you had 100 FTEs last year, they want to make sure you have 100 FTEs this year, is what it comes down to. So you could have a whole 100 different people. It's just you have 100 people on payroll.
Well, and you could have one less person, but another person working twice the hours. So.
Exactly. All right. If I meet the FTE reduction safe harbor 1, do I still need to calculate my FTE and track that information? So let's remember the FTE safe harbor 1 on the long form is the safe harbor where it says your business was impacted by COVID-19 to the point that you had to shut down because of CDC or HHS or OSHA guidelines. So do you still need to calculate the FTEs? Well, one would think not, but the quick answer is yes, you still have to calculate the FTEs. The reason why is because you've got to keep in mind the SBA still reserves the right to review all documentation and data that led to you using the safe harbor exemption. And having this information available will provide for accurate information to the SBA if asked. Again, that's the reason why you have to do, you still should do the calculations, because at the end of the day, you never know if your loan's going to get pulled by the SBA for review. And in fact, Mark, I have one client that their loan was pulled by the SBA for review, and it is an SBA review, and we took safe harbor number 1. So fact is, we did all the FTE calculations, and we're able to give all that information to the SBA. So again, you still have to do the calculations around it, and it's highly suggested that you do.
Yeah, there's just no reason to not do them. Even if they're not asking, even if you don't have to provide the information now, there's just no reason to not do it so that you have it available.
Exactly. if I meet the requirements for using the 3508 EZ form, do I still need to calculate my FTE's salary information and track that information? Again, same as the long form, yes. Quick answer is yes. And the same exact reason. So whether it doesn't matter what form you're using, you still should make sure that you have the FTE calculations, you have that information readily available to provide to the SBA. Can't stress that enough.
Sensing a pattern here.
Yes, exactly. All right, let's moving on here. If I meet the loan forgiveness requirements using just payroll costs, do I need to track the non-payroll related items? This is another good one, Mark. And we do have a lot of clients that have decided that they only want to go for loan forgiveness with payroll costs. And quite honestly, I think that's a good thing. It makes it very easy to say that you met that 60% requirement. So the question would be is if you're just going to use payroll costs, no, you don't need to track the non-payroll related items because the whole intent of the loan program, Mark, was for payroll. If you're going to use 100% on payroll, you can use 100% on payroll. That's not a problem. They give you the option.
Yep. I love the 100% payroll option. It's quick, easy to verify, easy to calculate. Love it.
Yeah, I agree 100%. Another question that we get is if I have a home office, can I deduct the expenses of the home office? So the quick answer to that is maybe. It all depends. So again, it goes back to, did you have the home office on February 15th of 2020, which is the date that they considered the pandemic to have started? If you had the home office at that point in time, yes, you can deduct the utilities and the mortgage interest associated with the home office space. So again, if you have a home office and that home office is charging rent for some reason, you really are limited to just the interest on the mortgage for the space that you're utilizing. Very similar to if you were taking a home office deduction in your tax return.
Yep. Related. You think that's a related party if it's your home office? I think so.
It might be. It just might be. So, all right. On to the last polling question of the night. This mascot was born on September 24th, 2018. Is it the Philly Fanatic, Gritty, Slapshot, or Swoop? So we'll give everybody a couple seconds to think about that. So keep in mind too, the Philly Fanatic is actually a new Philly Fanatic because the individuals who created the Philly Fanatic 40 years ago sued the Phillies for their rights to the Fanatic, and the Phillies had to redesign the Fanatic. So maybe it could be the Philly Fanatic on September 24th, 2018, Mark. It could be.
I had no idea. And here
Yes.
I was going to accuse you of reusing a question. So what did they change on the Philly Fanatic?
They changed some of his color. They changed his nose a little bit. It still looks like the old Philly Fanatic, really.
I feel like if I didn't notice a difference, there's still going to be some copyright infringement.
Right. All right. 4, 3, 2, 1. All right. So the answer. Okay, the Philly Fanatic 6, Gritty 64%, Slapshot 15, and Swoop 15. So yes, the answer is Gritty. Gritty was born on September 24th, 2018. So, all right. Were you shocked by that one, Mark?
No, I mean, you did throw me off. I assumed it was Gritty, but you did because you love Gritty. Actually, yeah, we should actually include a slide here at some point of you dressed up as Gritty, but we'll save that for another day.
We should do that. I did a nice job of that at the Halloween party last year.
I know.
All right, so Mark, we're going to wrap this thing up here, and then we'll answer a couple questions real quick. So what do we know? What does the future hold? I don't know, Mark.
I mean, literally from month to month for the past 8 months, if you would have told me what was going to happen in the next 30 days, I would not believe you. So I don't know why we would think the next 30 days is going to be any different.
Yeah, exactly right. We were getting questions here a little earlier too, Mark, in which somebody was asking, we had a couple people ask, what about loans between $50,000 to $2 million? Well, that's a great question because right now we got this questionnaire out there, Mark, for that's for loans greater than 2 million, but who's not to say that that questionnaire doesn't get expanded for loans greater than $500,000? You know what I mean?
Yeah.
Who knows? We just don't know what the answers to that are.
Right. And again, I don't, if because they're doing this stuff, because they kind of made this cutoff at 50,000 and then made another cutoff at 2 million, I can't imagine there's going to be, they're already doing it. So why wouldn't they have done it already? Although I've asked the question, why did they do this 18 times already in this webinar? So who knows?
Right.
The stimulus plan, I think you and I might disagree on this. I don't see a stimulus plan passing between now and unless the economy tanks again.
No, Mark, I think you and I are on the same page. I don't see a stimulus plan either right now because, when you add 600 and some thousand new jobs last month, your unemployment goes down to 6.9%. There's less of in the stock markets trading at 29,000. I think there's less stress now from a political perspective for significant stimulus. But as you said, though, Mark, we don't know what this pandemic's going to do this month, next month in January, and whether you go into more lockdowns where you might have to revisit this whole stimulus plan. But no one knows for sure from that perspective at all what that stimulus might look like, if there is any. And, the last thing I think Mark and I agree on is if you can file the 3508S or the EZ form, it might not be a bad idea to move forward with these applications and file them now. If it's a 3508 long form, might depend on your circumstances. Going back to what we said before, if it's a situation of you have issues with covenant calculations or bank calculations at the end, you might want to try to get that in and see if you can't get it forgiven. If it's not a big pressing issue, you might want to just kind of want to play it out and see what happens. Also, you got to look at this taxation issues that Mark talked about. So, but that's what the future holds right now. We're just really not sure. All right. So, Mark, should we go through a couple open questions here that we have?
Yeah, let's do that.
I see one that came in here says, not sure if I misunderstood, but if your loan is over 50,000, what form are you supposed to use? If it's over 50,000, you have the option of the 3508 EZ or the 3508 form. It all depends on, from the EZ perspective, if you can meet those exemption criteria or not. If not, you're relegated to the long form. And yes, the form 3508S is for loans under $50,000, as we talked about here earlier. That is correct. It would be for loans under 50,000, 3508S. See what else we got here, Mark.
Yeah, there is a consistent theme here of specific questions on the 3509 and the 3510, kind of saying, well, if my answer to this question is this, what is the SBA going to do? I don't know. All we can tell you is be honest, make your best case scenario for why that you felt the loan was necessary due to economic uncertainty, and just make sure. I think we can put a lot of faith in this good faith certification that when you applied for the loan, you felt it necessary due to economic uncertainty. Never, ever, ever want anyone to, fudge these answers a little bit because they're afraid what's going to happen. Be honest, and as long as you have a good faith certification, we have no reason to believe that that you won't be fine. Even if you're not, and it gets converted into a loan, that loan isn't the worst answer in the world.
Right. Here's another question Mark said. What if we didn't reduce anyone's salary, but perhaps their hours reduced? Does that warrant the salary reduction tracking calculation? So if you did not reduce anybody's salary and you did not reduce their hourly wage, you're fine from the salary tracking calculation, because if you reduce their hours, it would be picked up in the FTE calculation. Okay, so that is the answer to that question. If I had a salary reduction, if I had a salary reduction, but they are now earning equal or more, is the salary reduction not forgiven? If you had a salary reduction, but you restored the salary reduction and they're making equal to or, I think you're okay.
Yep.
Yep.
Yeah, you would be fine there. And yeah, again, that is one question we see over and over again, where you didn't reduce someone's hourly wage, but their hours went down. That's fine. That doesn't cause a problem on the salary test. It might cause a problem on the FTE test, but it doesn't cause a problem on the salary or hourly wage test.
Yeah.
If we receive forgiveness, when do we count it as income? Again, technically, it's not technically income. It's a disallowance of the deductions. We're taking the position that this is beyond the scope of this course, but there's this thing called the all events test for when you would take or not take the deductions. If all of the events have happened that fix the deductions or fix the add back, then you would add all the expenses back. And in our opinion, until you get forgiveness from the bank, all the events have not happened. So until you get forgiveness from the bank, you should continue to deduct those expenses.
Yeah. Question came in here too, Mark, about if we received our money on April 16th, you're going to use a 24-week covered period. Can we wait for forgiveness until 10 months after the end of the 24-week period? Yes, you can actually, the way the rules read, Mark, is you have 5 years, the term of the loan, to wait to ask for forgiveness. The 10-month rule comes in as the deferment period, saying that after the end of the covered period, you have deferred 10 months until you actually have to start making loan payments. But yeah, you can wait. You can wait. You don't have to file for forgiveness right away at the end of the covered period. If you want to wait and file later, you can do that as well.
Yeah, there's plenty of time. Here's an interesting question I hadn't seen before, but makes sense. Would a composite tax payment made on behalf of a shareholder to a state be considered, for an S corp, be considered a distribution for purposes of the 3509? Yes, it would. Assuming that is the company paying the tax on behalf of the shareholder, and it's not a company level tax, it's a tax at the shareholder level, that would be considered a distribution. But so you should report it, but you should be fine because it's for tax purposes.
Yeah. Clarity question for everybody. In regards to the 3508S form, you do not actually have to submit any documentation. You just have to maintain that documentation and have it on hand in the event that you're asked for that documentation by the bank. So just keep that in mind. Okay. What else we got here, Mark?
Scrolling through, I'm not seeing anything new or that I don't think we've addressed, and we are out of time.
Yes. So if there's Mark and I will take a look at these questions. If we haven't already addressed them, we'll try to address them in an FAQ. If they have been already addressed, probably won't address them in an FAQ. We don't have a ton of questions here actually today compared to some of the other webinars, but we'll take a look at them, and if they need to be addressed, we will make sure to address them.
And as usual, we are always here to help. Feel free to shoot us an email, give us a call with your questions. We're able to help with the review of the applications and anything else you need. So thank you, everyone, for joining us today. We're happy to continue to do this, and we will always continue to do these webinars as the information changes. For those of you who need CPE, those certificates will be sent out within the next 2 weeks. And a recap of today's webinar will be posted on our website in just a few days. So thank you, everyone. Hope you all have a great rest of your week and a happy Thanksgiving.
All right, Mark, thank you.